welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a strong start to the truncated week for the markets. The Nifty trades above the 10,500 mark. Real estate, pharma and metal stocks provide support. State Bank of India is among the top losers on the Nifty after it reports its first quarterly loss in last 17 years. Chairman Rajneesh Kumar says that he's confident of not seeing any further divergence by the next financial year. Tata Steel is the top gainer on the Nifty after its strong third quarter performance. And Sun Pharma is among the gainers as well after the US FDA begins an inspection of its Halol unit.
Well, thanks for that, Navneet. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and the market's looking okay. You can argue that there's a faint bit of an up and down, but that would always happen on any given day. I think we're moving broadly in this range of, or around this number of 10,500 odd, and equal participation by the Nifty Bank too. And the broader markets, of course, have done a lot better than what the large caps have. Remember, in Friday's session, while we ended in the red, the broader markets closed up in the green. In today's session too, very strong show, but they'd been beaten down equally badly. Bring up the heat map and then bring up some mid-cap stocks as well a bit later on. But the heat map and fair bit of green on the screen. You would argue that the two names which started off the day weak are still the weakest. So the SBI and BPCL still off and amongst the top losers, though must say SBI has recovered a little bit of lost ground from the lows of the day. And on the gaining side too, Pharma, Tata Steel in particular are doing extremely well. Pharma, Lupin, Cipla, Sun Pharma, those three. Aurobindo, I think, was doing well to about 3.5% higher for that one. So good going for Aurobindo as well in the session today. And some participation that has happened by auto names, namely Hero MotoCorp, Tata Motors, as well as Maruti Suzuki. So autos are having a good run in the session today. Two or three stocks that I thought we should mark from the mid-cap end of the market as well. There are stocks like SAIL, for example, which have done very well. There's some intraday moves that are happening in stocks like Walchandnagar Industries and a couple of others, and some result reactions. By the way, this one, 3M India, 14.5%, suddenly out of the blue, a big move for this stock. So doing very well for itself in the session today is 3M India. There is also some gains that we're seeing in Amara Raja as well as Avanti Feeds. So Amara Raja is about 6% in the session today, and Avanti Feeds about 2.5%. Good story for this one, just that the result reaction is not as strong as one would have anticipated. And last but not the least, a clutch of small caps which have had an extremely good session. So Walchandnagar up about 10-odd%. There was Aptech which was up about 10-12-odd%. So really good show by that one too. Will come up on your screen. So 13% now for Aptech. So select band of mid caps and small caps seem to be doing okay for themselves. Navneet, what's standing out in the FNO universe?
Well, Neeraj, a lot of result reaction is what we've seen in terms of OI build-up when you talk about the stock futures, but we'll take you through that in details. In terms of what's happening in the markets today, Nifty has been able to sustain the 10,500 mark, so that's one positive point. However, during the session, we did breach that mark, but we're comfortably back above 10,500, currently about 10,518. Let's just pull up the futures and see what's the kind of OI build-up that one has seen so far when it comes to the Nifty futures and also for the Bank Nifty futures. So 7% higher, but the discount, remember, continues for Nifty, 4.5 points discount. And let's just pull up the Bank Nifty futures. Remember, on Friday, there was a lot of build-up that was seen for Nifty. Bank Nifty today also has seen open interest build-up of nearly 4 to 5%. Premium, however, on Bank Nifty has been coming down to about 9 points at the moment. Well, what's crucial in terms of levels going ahead? Watch out for the 50-day moving average for both Nifty as well as Bank Nifty. For Nifty, it is somewhere about 10,561, and for Bank Nifty, it is about 25,873. If both these indices convincingly trade above these mark of 50-day moving average, probably you could see a further rally in the markets. In terms of option strike, what's happening there? On the call side for Nifty, we've seen the 10,700 and the 10,600. Both these call strikes so far have added between 6 to 7 lakh shares in trade. And on the put side, we've seen open interest addition coming for the 10,500 as well as the 10,400 strike. Well, for Bank Nifty, since the morning session, the 26,000 call strike, that's been very, very active. So watch out for this, because this is the strike which is sitting with maximum open interest concentration. As we speak, 2.5 lakh shares have been added there. And in terms of stock futures, we've seen a lot of open interest build up for a couple of these be it State Bank of India, you've got Indian Bank, Bank of Baroda. All of them have seen substantial OI addition. I'm going to speak about only two stocks. Amara Raja, which has gone up on very high volumes on the cash side. Remember, the numbers were good. The volume growth this time around has been pretty positive, 6% higher there. For the February futures of Amara Raja, 18% higher when it comes to the open interest. And similar are the trends for the Bank of India, which has gone up on high amount of volumes post the Q3 numbers. And if you look at the February futures in terms of open interest gainers, this stock features among top of the list. I'm talking about Bank of Baroda. Well, the February futures, that's of Bank of India.
Yeah, but strong move there in BOB as well. I don't know if the cost containment or the focus of India that the management cited in that interaction is leading to this and more. Anyways, let's talk about all of these factors and the market mood with Mehrbun Jairani, MD and CEO at Ginny Gems Consultants. He joins us right now in the studio. Mehrbun, good having you. It's been a while. You've been absconding, if I can use that term.
No, it was just having my own schedule as far as scope because of the budget and everything.
Well, always good having you in the studios. Thanks for joining in today. What have you been doing and what have you been telling your clients in this recent volatility, if I can use that term? I can't use the term weakness because we are back about 10,500 already.
I think we need to accept the fact that quite a few pockets of the market had become expensive. We need to accept the fact that people are virtually trying to discover stocks every passing day, that this is the stock which has not moved, now let us try to make it move. The point what I'm trying to state is that if you go back to January 2017, which is exactly 12-13 months ago, post demonetization, all those powerful voices on the street had turned very negative on the market. The same voices turned positive 7-8 months later when the markets went up and people started talking loosely of 12,000 and 12,500 and even a 13,000 coming on the Nifty. What I'm trying to state is the market is supreme. The market is our God. Let us learn to respect it. And today, if you're asking me, I would say that if you were invested in the market in January 2017 and had not sold off because of demonetization, you would have been much better off. Trying to time as to when the markets will fall, when the markets will correct is something which honestly nobody can do.
Sure.
So the extra money which you have made, some part of that money the market has taken it away from you in the last 10-15 days. The point is, what should I do now? I think we need to accept the fact that a large part of the complacency has been shaken off. The market, there is still some complacency left. Will it be an easy year, 2018? Answer is no. But will it be a year where if you understand your stocks well, will you make money? My answer is a very strong yes. So while we could get shaken off many times, volatility is here to stay. 2018 is going to be a little bit tough. Money will go out of equity, go into bonds. Bond yields will firm up possibly a little bit more, especially in Europe, distinct possibility. The fact is growth is coming back. The fact is corporate earnings are going to improve. The fact is, at least I believe, that GST collections will improve. So factors will turn positive for India, but India will have its own problems in the second half of 2018. You will have the state elections. Right. You know, media houses has got its own favorites as far as political parties go. People will go on spreading stories. Markets will feel a little bit nervy. And for all you know, God forbid, in the second half of 2018, there is a possibility that we will be starting to discuss that is there some political uncertainty as we go into 2019 parliamentary elections. This is something which I personally dread. I personally fear that this could also have its own impact on the market. So in short, market is going to have its own volatility. There could be more downs than ups. But at the end of it all, if you ask me, will an investor make money if he knows what he is buying? And I think stock picking has never been more important than what it is today. I think there will be a lot of opportunities coming investors' way. Look at if somebody had the guts to buy 4 days ago, it would be 5, 10, 15% up. Such type of returns, I think markets will keep on providing in 2018. It's not a market in which you come and buy, keep your eyes closed, open your eyes after 1 year and say, I made money. It's not going to be easy.
So what stocks, and let's talk about the results that we've seen thus far, and let's break them up into one so that we get better clarity and focus. What did you make of the steel companies' results, namely Tata Steel and SAIL? Because I thought those two have been the standout gainers over the last 2 days, SAIL in particular. There was a bit of a turnaround seen. How have you viewed that?
I think both are good. I think SAIL, I personally believe, looking at listening to the management commentary, things should improve. And I have been a believer that you should have at least one metal stock in your portfolio. In order of preference, my preference would be Vedanta at number 1, Hindustan Zinc at number 2, and Tata Steel at number 3.
Why?
I think Vedanta could be a super long-term bet. If you understand the way the company has been investing its money here and there, acquisitions, Hindustan Zinc, I think it's a super dividend yield story, and so is Vedanta in a way. I expect them to pay lovely dividends also. So I would say that this is a market in which you need to look at stocks in which the downside is something which you can quantify and the upside could be anything. And over there, I think Vedanta and Hindustan Zinc has an edge over Tata Steel and even a SAIL for that matter.
Okay, let's then talk about a sector which is very important both from markets perspective as well as economy, banking. What have you made of the numbers? State Bank of India posting losses, quarterly losses after 17 years. And on the other side, you got Bank of Baroda, a good set of numbers from them.
Honestly, I am a little bit amused when a lot of people have been speaking very negative on PSU banks. I think this is a pocket which can provide super opportunities, and I hope you understand what I'm trying to state. I'm not saying that the worst for the banking sector is possibly behind us, but at the end of it all, you need to accept the fact that many of the PSU banks are virtually writing off a lot of their NPAs. If and when the act which has come into place helps them to recover whatever money, it will come and straight away come as a profit for the bank. So I'm quite positive on PSU banks, certainly from a trading angle on the long side. Now, whether you buy a Bank of Baroda, which I think would be my first preferred bet, or an SBI, which would be my second preferred bet, somebody would prefer a PNB, it's a difficult thing to say. But at the end of it all, I believe that there should be at least one public sector bank stock in your portfolio right now, and possibly if you are quite fleet-footed, I think 2018 again will provide a great opportunity to trade in PSU banking stocks. As far as the private banking sector stocks goes, I still continue to say what I've been saying for many years. I think Kotak, IndusInd Bank and HDFC Bank, not necessarily in that order. If you ask me, HDFC Bank at number 1, Kotak at number 2 and IndusInd Bank at number 3 are part of my core portfolio, part of my client's core portfolio, and I'm least bothered as to what is happening to the stock price right now as far as this type of stocks goes. So virtually two categories, core stocks, the three private sector banks, other private sector banks like ICICI, Axis and Yes Bank, I would say are high beta trades. You can go on trading in it if you understand how to trade in them. But PSU banks, I think, is a pocket of opportunity.
But did you use this recent opportunity of, we've seen some correction coming in for the HDFC twins. So would you recommend investors to buy at lower levels as well? Because there was some FI selling which is coming into our markets in the last 5 sessions, considering they're heavily FI owned, both the HDFC twins. So would somebody should be using this opportunity to add more in their portfolio, because it's a rarity that you see a correction in both the twins for 3 to 4 sessions? Honestly,
if you look at the way the markets have been, I think since a week or 10 days before the budget, indices were going up, portfolios were not going up, and it started with the HDFC twins. So they had possibly, like, they were running in the backyard and suddenly they came to the fore and made the indices go up.
Right.
Coming back to your question, I think 100 rupees for 150 rupees for an HDFC bank is an opportunity to buy into or trade into. I have honestly never looked at the stocks from a trading angle, and I honestly, again, I'm saying I don't bother to look at what the prices are. I would only like to state one thing, that about a year ago when HDFC bank was at least 30-35% lower than where it is today, I had passed one remark. If you have the Ujjivans and Equitas at this valuations, I think HDFC Bank is the cheapest stock in terms of valuation in the entire financial services space. And I turned out to be right, a little late in the day, but HDFC Bank made a super move. And now the stock is correcting. Should one buy into it? I think the best advice I give to my clients is make an SIP and go and buy HDFC Bank shares for the next 3 years.
Okay, now in terms of the non-index, the mid-cap end of the market, Mehroon, we are almost at the fag end of the earnings season. Which company's commentary did you like the most? I mean, valuations is one thing. What is expensive today may become cheap 3 years down the line if the earnings catch up. What commentary impressed you the most?
I would say that besides the commentary, numbers, budget, beneficiaries, I think if you put all this factor together, I believe that in this market in which some sort of uncertainty has come as to will I make money in 2018 or not, I think investors would do well to look at companies where they can define the downside and have a much larger upside. That is the one way to look at it. Second is the management commentary, and third is the future growth ahead. Now, future growth ahead and commentary, budget beneficiaries wise, I think, like look at the auto pack. I think Ashok Leyland stands out, followed by maybe a Mahindra, and Mahindra as a dark horse, mainly because of the rural play. I also believe that, and I have been stating this, Neeraj, and I am quite sure you will recollect it, that I have been very gung-ho on something called Digital India and something called the cable industry. And I feel there are pockets of opportunities despite the stock having given 100-200% returns like Sterlite Technologies, Himachal Futuristic, even a Vindhya Teledink. I think they look very, very attractive. And mid-cap names like maybe a Shankara Building Products, maybe a Quest Corp, which is going on making acquisitions, which is going to come into the numbers in 2018, 19, 19, 20, and I think the numbers are going to surprise the market very positively. I think these are the type of stocks where the things are good, industry is good, management commentary is good, and things are going on happening. So I think looking ahead, if people say, oh, the numbers were good, but will the numbers be good going ahead, stay away from the stocks.
But I wonder, okay, fair call.
But if you feel that the numbers are good and the growth has just started, go and buy those stocks. And that is what I said at the beginning. 2018, you will have the stocks coming down 5, 10, 15% in 1 or 2 days. Just go and buy into them at that particular point of time.
So why, I'm just wondering, by that extension, why not Equitas? We're talking about margin of safety out here. The stock has underperformed massively. If I just looked at what they did in the quarter gone by, they have provided for almost all of the expansion costs upfront, all of the employee expenses upfront. They have accounted for almost all of the bad debts that could come about. I think the provisioning has gone to 97.5%. So they've done all the provisioning right now. All the market is probably waiting for is the cost to income ratio to come at a more reasonable level. Whenever it happens in a couple of quarters down the line, probably a vindication of what the management has been trying to say all along.
I think my remark was taken in the wrong context.
No, not at all. I didn't take it in any context.
I am not at all negative on Equitas. Just for information, I had advised my investors to buy into Equitas, and some of them are still holding on to it.
Okay.
What I was trying to state is the way Equitas has shot up, maybe 180, 190 levels. OG1 levels at least 40% above this, and HDFC Bank 30% below this. So relatively at that point of time, HDFC Bank was attractive. And if you're asking me about Equitas right now, I would like to state one thing, that you have 2-3 financials in your portfolio, maybe 4-5 financials. One should be a PSU bank, one should be a core holding private sector bank, and possibly 1 or 2 companies, and in which I think Edelweiss has been my best pick. So if I have an Edelweiss, should I have a Motilal, should I have an maybe Equitas, maybe a OG1. It's a matter of choice. Shriram Transport is another thing. So there are interesting names in this pack. The point is, what do you go and buy and how many of the stocks you have in your portfolio? If you're convinced about 2 or 3, I think it doesn't make too much of sense trying to look out elsewhere.
The large cap IT stocks have seen some revival in the recent past, and I think the positive takeaway from the earnings this time around was there was no negative commentary which came in. There was no negative surprises, at least so to say, from all the biggies of TCS, HCL or Infi. Anything at these levels? I know no point talking about the valuations. We know that they've corrected a loss, but anything attractive which one can keep in their portfolio for the next 2 to 3 years?
No, I think when you were just had started and you all have come a long way as a channel. I think I remember having stated in one of the early shows that if you give me a choice between IT and Pharma, I think IT is a sector which will bounce back. And I'd gone on record to state a very dirty remark about Pharma. I said the story of Pharma is over. The best is over. So I think IT ultimately is making its big move, has made its move over the last 1.5, 2 months with the TCS and the Tech Mahindras and the HCL Tech, and even an Infosys making its move now. I think I would like to continue to remain invested in one frontline IT stock. The point is which one? I think my top pick even now would remain a TCS. Is it expensive for the moment? Answer is yes. Is it a stock which I would like to keep it in my portfolio for some more time? Answer is yes. So it is not a sector after the move it has made over the last 1 to 3 months. It is not a sector and one is going to make money in a hurry. The pain for the IT sector still continues. I just said the story will come back for the IT sector, and market is already discounting a large part of it much in advance. So I'm not too gung-ho at the present valuations. I'm just saying that if people find a better opportunity, they can in fact possibly come out of the frontline IT stocks and of course elsewhere. But if you don't mind staying into a stock which has suddenly made a move up and not give you any further returns for 1, 2, 3 quarters, there's no problem holding on to IT.
Okay. Mehboob, always good having you. More so today. Thanks so much for taking the time out. It's been a long time, but good having you today.
Thanks a lot.
All right, that Mr. Mehboob Irani, with his thoughts on markets, on specific themes, as well as pockets that investors should be aware of and wary of as well. Now, we're talking about earnings, and PPAP Automotive came out with their numbers a while back. The net sales up just about 6%, EBITDA margin expansion, yes, profits up about 23%. If I just look at what they've done this quarter versus what they've done the last quarter, a bit of a disappointment, and maybe that's why the stock is sold off a bit post the numbers too. Let's get in the Managing Director and CEO Abhishek Jain on the line to talk about the numbers and the outlook ahead. Good having you, Abhishek. Thanks so much for taking the time out.
It's our pleasure to be on your show today.
Thanks. So while the margins have expanded, and I'll come to that, just when I compare what PPAP has done this quarter versus the sequential quarter, the growth doesn't look as good. Are you yourself a bit disappointed by how quarter 3 has shaped up?
See, in the automotive industry, there are a lot of shutdowns in the third quarter. So customers like Maruti and Honda, they generally have a maintenance shutdown for about a week. And therefore, there's no car produced in that week. So if you compare quarter 2 and quarter 3, there's a big difference in the number of working days between both of these quarters. So you cannot actually have a apple-to-apple comparison of sales in these two quarters. However, if you look at the numbers from last year to this year, so we have a good growth coming about 6% in the top line. And if you look at the part sales, those are growing by 17.85% compared to the last year same quarter.
Sales? What did you say is growing at 17%, Abhishek?
The part sales have increased by 17.85%. If you compare quarter 3 of financial year 17 with the quarter 3 of financial year 18.
Yeah. Okay. The part sales. Okay.
Yeah.
But your overall...
That's what is driving all the expansion in PAT and EBITDA and the good EPS that we are reporting.
Okay, fine. Okay, fine. Fair call. Now, the point is though that if I look at some of the other companies in the automotive space this quarter, pure play auto companies or auto component companies, they haven't really witnessed too dramatic a slowdown, and which is why I'm wondering whether what's happened with you is, something that is out of the ordinary, and will this correct itself in quarter 4 and the quarter 1 of the next financial year? Do you believe that from these 6% numbers of net sales growth, you can move on to slightly more robust numbers fairly quickly?
See, I cannot comment on what other companies have done, but for us, Maruti and Honda, they play a very important role, and almost 70% of our sales is to these two customers. And these two customers had their shutdowns in the month of December. So that is the primary reason why our sales are down if you compare it to the previous quarter. And, the industry is growing at a healthy rate of about, the production rate is about 5.2%. And we are very confident that it will continue, even if it better itself in the quarter 4 of this financial year.
Abhishek, you said Maruti and Honda, they constitute nearly 70% of your revenues. And if I'm not wrong, the money which PPAP Automotive makes per vehicle from Honda is on the higher side. You can tell me the number. I think last one I checked was somewhere about 7,000. So do you see that number going higher, and also contribution from Honda going higher in the coming quarters?
See, as part of our growth strategy, so we are continuously scouting for new opportunities in the auto component space, keeping our core competence in mind. So this 6,500 to 7,000 is the current number of the value of products that we are supplying to Honda. And we are continuously trying to evaluate more opportunities with them.
And any new client that you've added recently?
This month we've been able to add NG Motors, which is the Chinese automotive maker who's taken up the GM plant in Halol. So we've been able to add them as a customer of ours.
Okay, Abhishek, how is capex happening? Because the last time that we spoke, you were talking about expanding capacity for Chennai and the Gujarat plants. Now, is that on track? And when does the capex come fully on stream? And how much does it add to your business as a result?
Till date, we've spent about 40 odd crores on our capital expenditure, and the total plan was roughly about 50 odd crores. So, and most of it was supposed to go to a greenfield project in Chennai and in Gujarat, and a brownfield project in our existing facility in Patna. So our Chennai plant is on stream, so we are ready for it, and the sales have already started. And the Gujarat plant, we've just started our operations on a rented premises. Our own building is under progress, and it will be ready by June of this calendar year. And our brownfield expansion in the Patna plant is almost complete. So basically, with these new plants, we will be able to attract new business from customers who have operations in those respective areas. So customers like Hyundai, Nissan, Suzuki Motors Gujarat, Toyota, Tata Motors. So we'll be targeting all these customers in a big way now.
So you're saying FY19 will see the benefits of normal business as well as the expanded capacity both?
Yes.
Okay.
And from Gujarat plant, we've already started supplying to the fifth model, which has been just recently launched. So that incremental sales has already started.
Abhishek, what's the current capacity utilization of all your plants?
It's roughly about 80 odd %.
80. And can we see that going higher in the coming quarters?
Yes.
Okay. Abhishek, just a last question from my side. For 9 months, you've done 23 crore of profit versus 16, which was there in the corresponding quarter. And considering, as you've highlighted, there were some disruptions in the third quarter, what sort of numbers can one expect in the fourth quarter? Can it be higher than the number you've posted in the third quarter?
We've been able to improve efficiencies across all our manufacturing operations. So in the first 9 months, we were able to sustain our EBITDA margin of about 20 odd %. So now we are scouting more opportunities where we can improve it. So we are focusing on support operations like purchasing, sales, logistics. But sustaining this 20% EBITDA margin is not going to be a problem for us going forward.
Okay. And what about the debt equity, Abhishek? What is the current status on the debt equity, and what's the aim to bring it down to or take it up to over the course of the next, say, 15 months?
We are at a very comfortable debt equity ratio of 0.14.
Okay.
So there is not a cause of concern for us at all.
Okay, so I would presume that if there is any need for further capital for enhancing capex, you will not tap the equity route for it, if at all it will happen through debt.
We don't have any plans for that. And like this year, whatever capital expenditure we have done it basically by our internal accruals.
Okay.
So going forward, I think we should be able to continue that trend as well.
Okay, we'll leave it at that, Abhishek. All the best for the quarters ahead. Thanks for taking the time out and joining us.
Thank you.
Well, that's PPAP Automotive. They sounded a lot more confident or a lot more optimistic, I would say, at the end of the December quarter, if I'm not wrong, when they spoke to us. This quarter numbers left a bit to be desired, but the management hopeful of FY19 turning around, both in terms of normal business as well as expanded capacity, adding on to the numbers in FY19. Let's wait and watch if that happens. Okay, while we've 4 minutes to go before we get in our technical experts on board and talk about trade today, which is looking very robust. But time now to put the spotlight on the index. The Nifty's seen one of the biggest corrections, and in fact, probably the biggest correction since demonetization. Jayesh Kirani takes some Bloomberg charts and tries and puts the corrective moves into perspective. Now, Jayesh, do the charts suggest anything?
Yes, Neeraj, the charts are in fact suggesting that the correction that we had in the past few weeks, that may likely be over if history is to go by. Now, there are 3 charts which actually I want to refer to. So that's the last, 1.5 year chart on the Nifty, plain vanilla chart. So what we have seen is that this decline over here on the Nifty, this is about 5.5%. And we saw that, similar kind of decline right at demonetization lows, if we can see that one. So that at demonetization low was about 7.2%. Since that time, what we have seen is there have been minor corrections. 4 of the largest ones, that was just about 4%. So we had 2 corrections where the Nifty dipped 4% and the dip was actually bought into, and once again the Nifty started its rally. And then we saw again in November and December of last year about 3.5%. So that's at most what we've got, just about 3 to 4% on the correction front. And this time around it has actually surpassed, and this is the biggest correction that we got since demonetization. The other thing what I did was, narrowed it down to a little bit to a 6-month time horizon on the daily chart. So if you see on September 29th, the low that was clocked, and if I connect this low to the December low and draw a trend line, what actually happened was that the Nifty dipped and crossed this trend line. But mind you that the Nifty did not actually close below this trend line, which would have, become a resistance after it had actually done so. So now what happens is 10,400 or 10,400 thereabouts becomes a key support level for the Nifty. So, we are currently very close to that level, and it looks like we are going to head upwards after, this support is actually maintained. The other chart that, was very interesting. Now, the same data points I'm referring to was the September low and the life high that we got. Now, the actual, the numbers that you see, those are Fibonacci retracement numbers from September low to lifetime high. So if you see that this green line, this is the 61.8% retracement level, which is close to 10,254, and the Nifty, this candle clocked about 10,276. So just very close to where we had, and it has actually moved above the 50% line. So what we have to actually wait for now is the 38% retracement and the 23% retracement to be taken out. Those will actually be the resistance numbers. So to put numbers to that, 10,600 to 10,800, that will act as a resistance for the Nifty going ahead.
Well, thanks a lot, Jayesh, for that interesting piece of analysis. And that was the first biggest correction that we've seen post demonetization. That speaks volumes about volatility in 2017, which was definitely on the lower side. And into 2018, volatility could be one of the themes. That's what most of the market experts have been talking about. While talking about the markets, we're almost at day's high, 10,536 on Nifty, and Bank Nifty is trading around 25,689. What should one do at these levels? Let's get in. Sumit Bagadia, Associate Director at Choice Broking, who is joining us right now. Hi, Sumit. Good afternoon to you, and thanks a lot for joining us. What positions are you taking at these levels, 10,537 on Nifty and around the 25,700 mark on Bank Nifty?
Hi, good afternoon. Well, as far as a view on market is concerned, we feel that from here on market should move up. Immediately, for intraday, Nifty has supported around 10,470, 480 levels, and for overall positional trade, it has supported around 10,400 levels. And on high side, immediately from here on, we feel that the markets are headed higher, and from here on, we can see levels of around 10,650, 10,700 levels in next couple of days. So for a trading perspective, one should initiate long positions in Nifty at CMP, or if there is a dip of around 30 to 40 points from present levels, then that should be used as a buying opportunity for the upside target of 10,650, 10,700 levels in next couple of days. As far as your question on Bank Nifty is concerned, same is the case with Bank Nifty. Bank Nifty is also looking strong on charts. From here on, we are expecting an upside move in which we can see 26,000 levels as an immediate target, and if 26,000 is taken away, then we can see extended move till 26,400 levels. For a trading perspective, one can initiate long positions in Bank Nifty at CMP with a small stop loss to be placed at 25,400 levels on lower side for the upside target of 25,900 and 26,000 levels in next couple of days.
Okay. By the way, as we speak, the index is headed higher. I think not HDFC Bank probably has some role to play out here. Reliance has some role to play. HDFC has some role to play for taking it slightly higher, because these are the stocks that are now trending higher and are in the last 15 or 20 odd minutes have given a bit of an uptick. Reliance too, from the levels that it was at, is trading much higher in the session. Before you get your stock ideas, any trades here on these three heavyweights, Sumit, be it Reliance or be it one of the HDFC twins?
See, SDFC is looking good to me. In fact, SDFC and HDFC Bank, both are looking good to me on charts. As far as the view on SDFC is concerned, I think from here on, one can initiate long positions in SDFC. We can see a good upside move in next couple of weeks or probably next 1 or 2 months from present levels. It's presently quoting at around 1787. If there is a dip of around 30 to 40 points from present levels, then that should be used as a buying opportunity. And on higher side, we can expect the counter to move up till 1870 or 1900 levels. That means a move of around almost 8%, or there is a possibility that we might see a move of around 10% from present levels. For a trading perspective and as for a investment perspective, one can initiate long positions in SDFC. As far as your question on HDFC Bank is concerned, this counter is also looking good to me. We feel that from here on we can see a good upside move in next couple of weeks. One can initiate long positions in HDFC Bank at CMP. If there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. From here on, we are expecting a very good upside move in which immediately we can see levels of around 1950 and 2000. And on the higher side, there is a possibility that the rally can continue and can test levels of around 2100 in a positional time frame. So for a trading perspective as well as positional time frame, one can initiate long positions in HDFC Bank also.
Navneet, the entire ADAG pack seems to have gained a little bit of ground. Before we get in the stock ideas, just want to mark these Reliance Power, Reliance Infra, Reliance Communications from the levels that they were at are trading at a higher level. In fact, Reliance Power has certainly shot up, but the other two are not far behind. And there are also stocks like BF Utilities, for example, which are also moving up in the last few minutes of trade.
That's right, Neeraj. In fact, as you've already highlighted, the ADAG pack is up and about in today's session. But besides that, few more stocks which have gone up are the likes of Just Dial, HTIL. All of them have seen gains of between 5 to 6%, and even Mahanagar Gas. So that stock's been featuring among the top 10 F&O securities after a while. Mahanagar Gas is trading with gains of nearly 5%. And not to forget, Amara Raja Batteries, which posted good set of numbers, has seen huge amount of long build-up, which has come in today's session. Sumit, very quickly, what are your top trading strategies for the day?
The first one is NBCC. NBCC is looking good on charts. It has given a good move from lower levels, and from here on we are expecting the counter to move up and touch levels of around 230 as the immediate target. For a trading perspective, one can initiate long positions in NBCC at CMP with a small stop loss to be placed at 207 on lower side for the upside target of 230 levels. Second pick for the day is Axis Bank. Axis Bank is looking good on charts. After a correction, it has taken a pause, and now from here on we can see a upside move in which we can see levels of around 590-600 as the immediate target. For a trading perspective, one can initiate long positions with a stop loss to be placed at 550 levels on lower side for the upside target of 590 and 600 levels.
Okay. So stocks which are trading at fresh highs, just before we get in Hemant Kapadia as well. Precision Wires, if I'm not wrong, is trading at fresh 52-week highs and a big move in the session today. So the small cap end of the market, Precision Wires is up and about. There is strength in JK Tyre today, about 8.5% higher if I'm not wrong. Strong move there, 3.5 million shares, and again trading at fresh highs for itself. And 1% Beverages too is up and about today, up about 3%, trading at fresh highs.
You know, since you highlighted JK Tyre, I guess the entire tyre pack is doing well. Pull up, Seat, or for that matter, Goodyear India, all of them have seen substantial gains. Apollo Tyres is also trading with gains of nearly 2%. MRF is also up and about with gains of nearly 2.5%. All right, that's a couple of the stocks which are buzzing in today's session. Let's get in Hemant Kapadia of KR Choksi, who's right here with us in the studio. Hi, Hemant. Good afternoon. What are you doing on the index? Are you still staying away or creating fresh longs?
No, time, very good afternoon to you, Navneet. I think time has come where one can start nibbling. There is still 10% chance there could be one last fall coming in, Navneet. But before that comes, I think we are probably going to see 10,550 and 10,736. Why I'm saying that 10,736, there's a gap between 10,702 and 10,736, which I think the Nifty will make an attempt to fill up. So till then, I think I would be slightly positive. After that, if there is a fall, I have a feeling that could be the last fall for the timing, and then one can stick my neck out and say be aggressive.
By the way, now that you are in the studio suggests that the fever is gone, so I'm happy that you are hale and hearty, Hemant. What are the stocks that you're recommending today?
Yeah, having said that, yes, Neeraj, much better. I think two stocks which have posted what I believe are possible intermediate bottoms, not short-term bottoms. One is Balrampur Chini. We've had a protracted decline. Worst seems to be over. So buy in Balrampur Chini at around 119.
In cash? That's in band, right?
Oh yeah, in cash.
Okay.
With a stop loss of 116 and a target of 125. Second one, which also seems to have posted an intermediate bottom, the MACD and a few of the mechanical indicators on the daily chart underneath have given crossover buys, indicating that we are seeing the onset of a near-term up move at least. Buy McLeod Russell at 173 with a stop loss of 170 and a target of 179.
Wow, you're going whole hog in commodities. That's interesting to know that. I mean, I want to get one perspective then, since we're talking about commodities, on the two steel companies, Tata Steel as well as SAIL in particular.
The Tata Steel, there's no problem with Tata Steel. The only thing is the rights is opening on Monday, Neeraj. So will that have an hangover? It probably will. If that wasn't there, I think Tata Steel has given an upward key reversal, Neeraj, last week technically, which is fine. It's closed above the 55-day moving, will close above the 55-day moving average today. Volume is highest in the last 7 trading sessions. So everything seems to be hunky-dory except for the rights issue. So it seems fine. SAIL is relatively better from that point of view, but 77, 98, 5 trading sessions, SAIL is an elephant. So having said that, I'm not sure if the risk-reward ratio in going long right now, not without a correction, but the bigger picture seems fine. The long-term chart, if I look at the monthly, Neeraj, most of the mechanical indicators which I follow, like the MACD and all, are in crossover buys and have sustained. So looks good, but I wait for a correction.
Okay, that's the view on the steel makers, Steel Authority and Tata Steel. Both these stocks have been quite active, and SAIL especially, which was up and about in Friday's session. Besides that, Bank of Baroda, that's seen a good reaction post its numbers. Remain on the charts. Bank of Baroda, do you see any sort of fresh breakout on the upside?
Frankly speaking, yes, but
avoid.
What I mean to say is it's flopped so many times, it's crying wolf. Is it the real thing? Technically, MACD is just giving a buy today. Navneet, stochastic is in buy, and the volume, Navneet, volume is highest in the last 48 trading sessions on the NSE. We'll have to look at the delivery markings. Will close above the 55-day moving average. So despite whatever has happened in terms of fundamentals, Navneet, technically the stock seem to be getting out of the woods. Levels to watch are 172 and 179. So I wouldn't recommend a buy, but it looks technically much better than it has been in the last 2 months.
You know, I just want to mark one, while ADAG is up, the Adani Group stocks too, all four: Adani Power, Adani Port, Adani Transmission, and Adani Enterprises. All four of them are having a good day under the sun. So about 1.5% to 3% higher for each of those. What's corrected quite strongly is Kitex Garments, and I'm not surprised there. I think the numbers left a bit to be desired. This one needs to give out a series of strong quarters for the investor interest to come back in a hurry. That is just not happening for Kitex. So that stock is under a bit of pain. But what is not under any kind of pain is L&T Technologies. Every time I hear people say that the run-up has been too strong and too swift and it could correct a bit, I think it comes up with yet another move which is very strong, and this one is no different. At 1465, this must be very close to its 52-week highs as well. But it's just been one big mover the last 12 odd months, or maybe the last 5 odd months. L&T Tech has just had a substantial move. You can see the large portion of that move of 83% came in post-October, which is when the larger move in IT and IT-related companies started as well. L&T Tech not strictly in that business, but somehow the stocks, both L&T Tech and L&T Infotech, have done extremely well post-October. This one clearly standing out in the session. I tell you, one more stock that is standing out though is First Source Solutions. Now I don't know if there's always this talk of a deal brewing, and there have been 2 or 3 cases wherein the stock has had a huge flare only to cool off. I don't know if this time around is different. It's been moving up for the last 3 days, and now it's probably eclipsed some hurdle rates that used to keep it under check in the recent past. The 7 days 16%, yes, but if you just look at the last 6 months chart, you will see that every time it came to this 45 kind of a level, it used to cool off. Now it's just broken above that hurdle rate. Let's see if there is more in store for First Source Solutions. Vinit Bolinchkar, Head of Equities Research at Ventura Securities, joins us right now on the show. So much to talk about, Vinit. Lots of results, lots of newsmakers. But I was talking about First Source, and I just want to extend that question to you. Anything that you are hearing, did you like something that the company did in the recent past? And if not First Source, the broader mid-cap IT space, wherein the clutch of winners seems to be expanding every single day.
So, I would like to draw your attention to one particular stock which I like and which can move up handsomely over the coming few years, and where traction has started coming in is Sanghi Industries. So we've seen realizations improve almost 11% out here, and there has been deceleration in electricity costs as well as admin expenses. So we've seen profits move up very sharply. In fact, as we speak, profits have gone up to 32 crores from 4.61 crores as of YOY, and almost 3x on sequential quarter. So given the fact that Gujarat has become a semi-deficit state, they've got their C-link for transportation too. I think the Bombay market will improve from them, and here from now on we'll see substantial volume growth plus price hike, and the fact that they have got 3 mines for lignite which are in the 50-kilometer radius will keep their power costs almost virtually the lowest in the country. So given that, I think there is a multiple operating leverage playing out in this company, and going forward I think this company will only continue to do very well.
Okay, that's about Sanghi Industries. The numbers came out during the weekend, but the other stock which has been doing well, Vineet, is Amara Raja Batteries. Now, both the battery makers have not done too well in terms of stock price movement, I'm saying, in the last 1 year. But if you look at the numbers of Amara Raja, they look good compared to the previous quarters, and clearly the street seems to have given a thumbs up. Anything from this space that you like?
So I think over Exide, Amara Raja is a much better play. Amara Raja has, there were several doubts over its valuations and etc. going over the previous few months, but they have revalidated the growth story, and I think Amara Raja continues to be a better play than Exide Industries out here in this space.
Okay, I'm just going back to that conversation about Sanghi. I was just pulled out their numbers, Vineet. You're talking about them doing well. Just wondering, actually on the revenue front or the total income front, they probably missed a trick or two, right? The revenues have declined a bit on a YOY basis, if I'm not wrong.
Revenue is down a bit, but look at the profitability. So realizations are improving, profitability is up, and going forward, this is going to be the story that will play out.
It's pure play operational, Vineet. I mean, you would have analyzed the numbers. No exceptionals out here. The jump from 4 crores to 32 crores.
No exceptions out.
Okay.
No exceptions out.
No exceptions.
It's purely a EBITDA play. Just being done very well.
Okay. Having said that, I mean, I know the PE is a wrong way, but on an EV per ton basis, how does Sanghi compare to some of its other peers?
I think it's very reasonably priced. I think that the market should, over a span of time, start re-rating it. I would suggest that over the next 3 to 4 years, I think its EV per ton from 80 to 90 would start moving out to 110 to 120. That is given the fact that it's doubling its capacity. It has got the lowest cost, and as I said, cement is a deficit state. Mumbai market, they're getting traction. They've already got a 10% market share. Their market share is improving. The coastal shipping is really going to help them get aggressive in doing volume play, going forward.
Okay. Fair call. Vineet, stay on. We'll probably try and tell you to comment on the next company that we're talking to as well. I don't know if you tracked that or no, but Repro India, they reported a 25% jump in its December quarter profits, aided by higher other income as well. The top line growth may be a touch disappointing, but let's get in the management to talk about how the quarter ahead could look like. The ED, Mr. Pramod Khera, joins us on the phone line to talk about that. Mr. Khera, good having you. Thanks so much for joining in.
Thank you.
Does the slower growth of top line worry you? Because I think everybody was working with a number of 250 for the traditional business and maybe anywhere between 70 to 100 odd crores for the books on demand business. with the 9-month number looking at 200, I would believe 350 looks a slight bit of a stretch.
Yeah, you're right. See, I mean, the traditional business, we had said that we would consolidate that in one location out of Surat. And that would be in the range of around 200 crores. And gradually we might take it up to 250 crores over the next year or two. But the focus is not on growing that. The focus is on growing the books on demand business.
Okay.
So if you look at the revenues this quarter, which are around 72 crores, is better than the previous quarter. And we expect to maintain this trend in the coming few quarters.
No, so what trend, Mr. Khera? I mean, so if you can tell us how much did books on demand versus traditional business be in this quarter of 72 crores?
Yeah, so if you see our books on demand business, we in the month of January, we clocked a run rate of 5.3 crores. Now, and in the month of November, it was 4.22 crores. Mm-hmm. So month on month, it is growing. And during the quarter, we did around 15 odd crores from the books on demand business.
So that is the October, November, December quarter.
Correct.
You did about 15 odd crores.
Yeah.
And you expect that, okay, fair call. So you expect that number to, what's the 9-month books on demand number, Mr. Khera, if you have that number at hand?
I don't have it on hand, but at the beginning of the quarter, we were doing around 1.5 crores per month. We have taken it up to 5.5 crores per month. So that's a trend. And that is continuing. In the coming quarter, this will be higher. So for the full year, whatever numbers that you were talking of, I think we should be able to meet those.
No, so you're saying that you could probably meet about between 80 to 100 odd crores for FY18 on books on demand?
It would be lower, around 70 odd.
70 odd crores, okay. Navneet?
Yep. Mr. Khera, the input cost for the quarter seems to be on the higher side, and we've also seen the pulp prices, correct me if I'm wrong, going up in the global markets. Could you tell us what sort of input cost pressures were faced in the current quarter, and how do you plan to combat them in the upcoming quarters?
Well, the input cost, you're right. See, what happens is that for us in our print business, the input costs are a pass-through cost. We pass them on to the publishers. So there's a lag of maybe 2-3 months, and after that, our pricing corrects itself. Plus, we also have long-term contracts with the paper mills, so it doesn't really impact us that much. And if you're seeing the cost of materials consumed, it has gone up in the current quarter. That is one in the printing, and secondly, because in the books on demand, we sold more books, so we consumed more material.
Mr. Khera, in terms of finance cost, there's been the finance cost actually for the quarter is substantially down if I compare it to the September quarter. What's the current debt picture right now?
Yeah, so if you recollect, we had an infusion of certain funds due to a preferential allotment, and the current debt stands at 124.5 crores. Now, because which was 232 crores on 31st March. So because of this, the interest costs have come down.
What's the plan, Mr. Khera, for that? Because I believe this is not all. Some part of that fund infusion is still left. So would you utilize that money, 25, 30 odd crores, whatever it is, into debt repayment as well?
Well, see, initially when the funds flow comes in, it's naturally we use it for short-term debt repayment. But the objective is to invest in our Repro books on demand business. We have a capex plan of around 30 crores over the next 6 months to 9 months, where we'll set up facilities in the north and south, and also expand our Mumbai capacity so that the books on demand business continues to grow over the next couple of years.
Yeah, which is your stated objective. So, okay, so roughly, Mr. Khera, and I'm not asking you for a specific guidance, but would it be fair to assume that you could end FY18 anywhere between 250 to 300 crores in terms of top line?
Yeah, it should be in that range.
And in your investor presentation, you have mentioned that by consolidating the facility at Surat for improving margins, so on and so forth. I'm just looking at your 9-month numbers. Your operating profit margins are at about 14.5%.
That's right.
What do you think you could end the year with? And is there an aim to take these operational margins higher in FY19?
See, the 14%, 14.5%, that should, we should be able to maintain that in the coming quarter. For the next year, our focus is not going to be to grow the print business. The focus is going to be to grow
BOD.
the prints on demand, the books on demand business. Now there, at this stage, we are not focusing on improving the margins. There, our focus is to get more and more market share. Next 1.5 years, that's going to be our focus. But we should be able to maintain the EBITDA margin that we have shown in the current quarter.
Okay, one last question then. This run rate that you've improved from 1.5 odd crores at the start of the year to about 5.5 crores as we speak currently. The run rate improving will not be at the same pace, I agree, but do you think that from where we are right now, which is start of calendar year 18, to where we will be at the end of calendar year 18, the numbers will look starkly different from a 5 crore right now to something significantly higher in December 2018?
Yes, that's what we are targeting for. In fact, if you look at our next 3 to 4 years plan, the online books sales market, we expect it to be around 8,000 crores, and we want to capture a significant market share over there. So if we have to achieve that, then obviously we have to maintain and maybe grow the run rate that we have currently.
Okay. Fair call. We leave it at that, Mr. Khera. Thanks so much for taking the time out and joining us and giving us that perspective. That's Pramod Khera, ED of Repro India. The stock coming off a bit, but the market not coming off a bit at all. 1% higher for the Nifty Bank and almost 1% apiece for the benchmark indices too. And boy, the broader markets are showing some traction, about 2% higher for the small caps.
That's right, Neeraj. In fact, this is the second or the third straight day that we've seen outperformance coming in from the broader markets. I also want to highlight the India VIX. That's also tumbled nearly 7% in trade. So that's a big relief actually, because remember, India VIX had touched the mark of 20, and now today from that mark of 19, it's fallen below the mark of 18, currently about 17.9. In terms of stocks, we've seen obviously some earnings reactions have been there, but pull up IDBI and HDI. Both these stocks are currently, HDIL is trading around the day's high levels, and whereas IDBI has seen good traction in today's trade. I mean, on any of these two stocks, is there anything that looks good?
IDBI seems more like a short-term, frankly speaking, trade, Navneet. Having said that, it's had a decent run-up, and we walked into 70, which was the previous intermediate high, so it looks promising, but we need a close above 70, and this move has been on from 56, so no, I'd wait for a decline. HDIL, once again, I'm not sure whether this is a turnaround or this is a dead cat bounce. We have been in a range for the last multiple months, Navneet, between 47 on the downside and 68 on the upside, and we continue to remain so. Short term, yes, it looks positive. We'd see some more upside. Are we out of the woods yet? Maybe, maybe not. It's too iffy to take that clear call as of now.
Okay. Fair call. Stay on, gentlemen. So much more to talk about. Let's get in, move on to the buzzing stock of the day and get in Nikki Mirchandani, who talks about Apcotex Industries. Nikki, why this one?
Okay, the stock has risen as much as 20%. It's hit its upper circuit limit today, and it's rose to its record high level to begin with. That's the reason we've picked up the stock. Now it's cooled down a little bit, off day's high, but then pretty much still good, around 17% gains that we're seeing for this counter. If you look at the volumes, we're looking at 24 times its 30-day average volumes on NSE. What goes behind the making of the numbers, and good set of numbers actually have been responsible enough for the stock up move. Now revenues has been up by 20% year-on-year basis for this company at a number of 138 crore as compared to nearly 115 crore that we've seen in the corresponding quarter. Net profits have risen 2.5 folds for this company at a number of 13 crore as compared to nearly 5 crore in the December quarter. And also there has been an EBITDA performance coming in by the company, almost a 3-fold jump there, 17.35 crore as compared to nearly 6.3 crore in the December quarter. Margins have shot up to 12.6% as compared to 5.4%. So what is has led to good set of numbers will be your cost saving techniques and higher revenue. Now raw material cost, that as a percent to your net sales has come down to 67% from 64 from 67% earlier. Other expense as a percent to your net sales have declined to 14% from 25%, which has led to a sharp expansion in margins. And also we've seen a good 50%, over 50% decline coming in on the finance cost, which has aided the bottom line performance of the company. Back to you guys.
Thanks a lot for that, Nikki. So that's Apcotex. Well, that's one amongst the many which arguably are doing very, very well in the session today. Just L&T Technologies is up 17% now. Just such a big move. By the way, I think Jaykumar Infra in the last few minutes has shot up about 10% now. But I think it's been a sudden move in Jaykumar Infra as well. Vineet, do you track L&T Tech fundamentally?
We don't track tech.
You don't track L&T Tech. Okay.
Since you're on that topic, just want to highlight Aptech is now locked in upper circuit with 20% gains.
Wow,
and
was up 13% at the start of the show.
And even Rolta has surged. In fact, that's also been doing well throughout the session. And right now, that counter also trade with gains of nearly 12%. That's Aptech, which is locked in upper circuit now.
Wow, some big moves there in mid-cap tech. Okay, the other pocket, Vineet, which is doing well is the tire stocks. Now, what is it? Is it the crude pull back that could be leading to some sentimental move up into tires? Do you track this space, and do you guys have any thoughts here?
So, basically it's the crude pullback only. It's a big play on that, and all the tire stocks are now becoming more of branded play and consumer stories. So I think that space will continue to do well.
Okay, hang on with the thought, because we need to slip into a break currently. But when we come back, we'll talk to Vinit Bulinchkar about what is it like within the tire space and why. Maybe get you some ideas too, and get in Yash to talk about the Fab 4 stocks of the day at 3:15. We'll also tell you what dealing rooms are recommending in the session today, and then some closing strategies from both our experts, Sumit Bagadia as well as Hemin Kapadia.
Welcome back. You're still watching Countdown with us. Well, there is strength in Indian markets, but look at the European markets, what they are doing. There's been a sharp rebound that one has got to see. CAC is up 1.6%. DAX, the German index, is up nearly 2% in trade, and FTSE 100 has also seen a huge rebound, trading with gains of nearly 1.4%. And back home, we've also seen some sort of uptick in the Pharma index. Let's just pull up the Nifty Pharma index. It's trading. It's one of the top sectoral gainers actually for the day, and stocks like it's off day's high, and stocks like Cadila, you've got Sun Pharma, which have been pretty active since the morning session. Vineet, I want to come to you. Pharma so far has been a laggard. Do you think it's the right time to take a bet in these pharma counters when the valuations have corrected sharply?
So, we are very, very eclectic and selective out here. And as a pack, we are not recommending our clients to buy right now. There's too much of froth still left there. And before some certainty comes in, we would like to wait a while.
Okay, Vineet, before we let you go, any top stock in the broader markets or in the large cap space that you guys are bullish on?
So we are quite bullish as a contra player ITC. We think that stock should do well. We also like ONGC.
Okay, Vineet, we'll let you go on that note. Thanks a lot for joining us today and taking us through your views on the markets. Well, it's time for us to talk about the Fab 4 stocks of the day, and to take us through the same as usual, Yash Upadhyay joins us. Yash, over to you. Good afternoon.
Good afternoon, Navneet. So, bumper set of numbers coming in from Precision Wires, and rightly so, the stock is topping our Fab 4 list today. Their revenue and EBITDA both more than doubled on a year-on-year basis, while their net profit saw almost a 3 times growth, coming in at about 11 crore rupees versus just 4 crores in the corresponding quarter of last year, and the stock is up about 17% or so. Big moves coming in from BEML as well after brokerage firm Elara Capital upgraded their rating on the stock from accumulate to buy rating. Now they believe that the company's earnings are estimated to grow at a compounded annual growth rate of 52% over FY17 to FY20, and they've also raised the target price on the stock to 2,000 rupees, which indicates almost a 60% plus upside from its previous day's close. Cadila Healthcare is also on our radar. The stock has surged almost 5.5% today after informing the exchanges that the US FDA has completed the inspection of its Moraiya facility and has also given 0 observations under the Form 483. And finally, we have an interesting name in Vakrangi. The stock is locked in an upper circuit for a second consecutive day after the company announced the 1,000 crore share buyback earlier in the day. Those are Fab 4 stocks. Back to you guys.
Thanks a lot for that, Yash. Interesting names out there, a couple of them. Sumit Bagadia, BEML, up about 7% today. I think the volumes too, compared to the recent past, fairly high volumes in today's session. Any thoughts here, BEML?
Well, after a correction, the stock has just started its up move. It has given a move of around 100 to 150 rupees from low levels. Now looking at the chart, it seems that we can see a pullback move in the counter, in which we can see levels of around 1470 and 1500. So for a trading perspective, one can initiate long positions in the counter at CMP. If there's a dip of around 30 to 40 points from present levels, then that should be used as a buying opportunity for the upside target of 1470 and 1500 levels in the next couple of days.
Okay, this is the 4th straight day of gains for BEML. The counter trade is trading with gains of 7%, but remember in the last 3 months it has seen a bit of pressure. Well, the other counter is Mahanagar Gas. That's up. That's trading above the mark of 1,000 in today's trade. And it's also in the futures and options segment, 5.5% higher for Mahanagar Gas. Simeon, on the chart at 1,027 on the cash side, would you take a bet?
No, we are walking into resistance Navneet at 1030. We are at 1027. And this bounce, we've seen it go up from 917 to 1032.75. Maybe there's upside, but no. If you give me an option, I can tell you a few other stocks, but not MGL.
Okay, some numbers there. United Bank of India, the stock should be reacting. Okay, While I'm waiting for the numbers, I think gross NPA numbers are much higher, right?
Yeah, it's 20% versus 18.8 sequentially. They posted a loss of 637 crore versus a profit figure of 64 crore, which was seen in the corresponding quarter. The net NPAs come in at 11.96 versus 11.63, and absolute number for net NPA is 7,365 versus 7,279. And as you can see, the stock slipped post the numbers have been posted for United Bank, a 15 rupees stock there. But there are a lot of stocks actually, like Canfin Homes, that's seen strength from the start of the day today, and I guess it's now trading almost at day's high with gains of 6%. Sumit, I'd like to come to you. How are the charts of Canfin Home looking as we speak? The counter is also trading around the day's high mark.
Charts are looking very good. Today we have seen a good price move in the counter. Looking at the price move, it seems that that this time the counter is can break the levels of 500 on higher side. I think in next 1 week to 10 days time horizon, there is a possibility that we might see a move of around 10 to 12% from present levels. That means a move of around 40 to 50 points. One can initiate long positions at the current market price too. Those who have taken long positions at lower levels, they can hold on the existing long positions, with a stop loss to be placed at 475 levels on lower side. And on higher side, 500 is the psychological resistance. Once if the psychological levels are taken away, we can see a one-way move till 540 levels. So for a trading perspective, as well as for a time horizon of 10 to 15 days, one can initiate long positions in the counter at current market price.
Okay. Well, Dharmesh Kant is with us with his thoughts on the markets as well. Dharmesh, you know, it's chalk and cheese for the NBFC home finance space. Canfin Homes is up and about. Today morning we were speaking to Indiabulls Housing Finance, and he was extremely confident about maintaining asset quality while maintaining the kind of loan growth that he's shown in the last 12 or 18 odd months. And at the flip side, we've had companies like Aspire in the Motilal Oswal group, which has actually not been able to do well at all, or a couple of others which have faced problems too. What are you doing within this housing finance space?
See, housing finance space is a selectively buy kind of a, category. You have to be, very stock specific. At the same time, the type of, the opportunity which has been thrown by the government of India on the affordable housing front. So where the, the builder itself is controlling everything. For example, in the case of Indiabulls Housing Finance, most of the, loan amount which has been given to are the clients who have been buying their own flats. So that due diligence is already there, and the end-to-end kind of, management is being done as far as, the clients who are buying their flats and the flat owners to whom they are providing their finance as well. So that is the reason why the management has been so confident about, their asset quality as far and the growth in the numbers are concerned. And they have always been into the affordable housing segment. So that is going to have a very good traction going forward. At the same time, if you have been lending to very subprime kind of a category, like the name you took about for Aspire, so 2 lakhs to 10 lakhs below kind of a loan category was always a grey area and will always be a grey area. Any economic hiccups, be it demonetization or anything like that, where the economy gets a backseat, specifically where the wages are concerned. I'm not talking about salaried employee. I'm talking about employees who are based on daily wages. So their earnings volatility is too high. Inflation is one of the other factors which can affect their earnings volatility. So those kind of pockets are seeing trouble. Not only Aspire, there are a few others as well, which are not in listed space, but my interaction with them did showed a kind of a concern out there. But I think the market as of now is more poised for a bounce back. It's a trading bounce back which you will see. It may again extend to 200-300 points more on Nifty, and there some kind of a valuation readjustment or normalization will take place, and that is where housing finance companies and the banking space will find some traction. So selectively Indiabulls Housing Finance or a Diwan Housing Finance, LIC Housing Finance looks to me a very good buy at current prices.
Okay. Well, it's 3:10. Ramesh, so much more to talk about, but it's 3:10. So that time of the show when we asked Navneet about stocks that could enter the F&O ban or get out of the F&O ban, in this time around in Wednesday's session. And Navneet, how's the list looking like?
Just two stocks, Neeraj, which may enter into the F&O ban. And if you look at the data as on Friday, they were pretty close to going into the F&O ban. So pull up those stocks, JP Associates as well as Dish India. If you go by the overall open interest as a percentage of market-wide position limit, which was there as on Friday, that was 93.2 for JP. For Dish TV, it was 93. And in today's session, we've seen good amount of build-up on the future side of both these stocks, indicating that the total open interest could breach the 95% mark, which is required for a stock to enter into the ban period. Let's just pull up these stocks and see what they're doing. I guess JP Associates was trading with gains of nearly about 2 to 2.5%, and Dish TV was also quite active in the last few trading sessions. Dish TV in today's trade, however, is about trading with gains of 1.2%. And talking about stocks, Neeraj, coming out of the F&O ban, Fortis Healthcare came out for today's session. Remember, this counter was up 18% on Friday. Society generally picked up some stake in the company, but currently the stock is trading just at day's low level with cuts off nearly 6.5%. Sumit, if I could come to you on the charts quickly at 138, has anything changed for Fortis considering the rally that one saw on Friday?
Well, I think it's better to avoid this stock. The stock is being volatile, and immediately the stock has resistance at around 148, 150 levels. Till the time these levels are not taken away convincingly, it's better to avoid the counter. And on downside, it has support at around 130 levels. So if 130 is taken away, then there is a possibility that we might see levels of around 120, 110 levels in next couple of weeks. Till the time 140 or 150 levels are not taken away on high side, it's better to avoid the counter.
By the way, stocks like Reddington are moving up. Pull up Reddington, that's moved up higher in the last few minutes of trade. 1% beverages, which was doing anyways well, has inched up even further in the last few minutes of trade. So that was trading at fresh highs and now has extended those gains. So good going for that one. And from amongst the large caps, HDFC is piling on some more gains. I think the top weightage contributors today, HDFC would be right up there on the gaining list. It's a heavyweight, which is up about 2%, should be contributing in a meaningful way in today's trade. What else? Just before we get in, Yatin Mota with his channel checks on what's happening within the dealing rooms. I think 2 or 3 names. One of them is Sangvi Movers, which is up about 6.5% in trade. Good move there. Sterlite Tech has about 2.5% kind of a move. And Som Distilleries, amongst others, is up about 3.5%. I wonder if Radico Khaitan and GM Breweries too are trading in the green. It should come up on your screen. 5% for Radico Khaitan. GM Breweries about 4%. So the alcohol names seem to be doing okay. Dharmesh, are you investing into any of these liquor companies? Their numbers seem to have shown a definitive turnaround, and United Spirits commentary at the end of the con call, Yatin was telling me, was arguably one of the strongest that he's heard United Spirits say in a long time.
See, as far as numbers are concerned, they are showing green shoots kind of a scenario, but at the same time, look at the valuations. So none of the, spirit companies justify the valuations always on a high because of the, spirits they consume. So I don't think, it's more of a trading play. As far as wealth creation is concerned, I don't think going forward, say 5 years or 10 years down the line, they would be creating wealth for the shareholders. Primarily because of a country in India where too much regulations are there, you just don't know which state government mood is going to change just for the electoral purpose. And again, you see some kind of a policy overhang playing out and the stock price taking a hard beating. And refer thin margins, what they report is hardly justify the kind of valuations they command. So my own take is just stay away from, the spirits, not only from the stocks, but, life as well.
Dhanesh, stay on. Let's get a sense of what dealing rooms are recommending in the session today. Yatin Mota is here with his channel checks. Are they recommending any liquor stocks, Yatin?
Not liquor, but surely, hospital stocks. Because after you drink, you need to visit the hospital if you overdo that. Fortis Healthcare, that is one stock wherein, FIs are said to be aggressive sellers. Of course, we saw pullback last week, and the stock was in the F&O ban, and which came out from the F&O ban today. So, a lot of unwinding is what we are looking at. Plus, there are FII sellers, so dealers expect some, downside as far as this stock is concerned. CEAT, on the contrary, dealers expect good domestic flows, and on the basis of the F&O trends, dealers are recommending a buy. As far as CEAT is concerned, good volumes in trading today. And finally, in the cash market segment, Neeraj, you were mentioning this already, 8% up for Sangvi movers, and dealers expect some short-term upside on the basis of HNI buy flows which are there in the counter.
Well, thanks a lot for that. Yatin, just wondering, heard anything on J. Kumar Infra? The stock is on a sudden spike in the last few minutes of trade.
Nothing specific, Neeraj, but in general, we are looking at some good strength which is coming in the mid caps since we have the markets which is moving higher. Nothing specific as far as J. Kumar is concerned. Probably, there should be some bit of buying which is happening in, but nothing which is there reported on the stock exchanges. Neither is there some news report suggesting so.
And nothing from the dealer side either. Okay, fair call. But look at that stock and look at that chart. It's a beautiful chart. Up 15% right now and has gained substantially in the last few minutes of trade. Hemen, J. Kumar Infra.
We've posted a fresh 1.5 year high, Neeraj. Looks fine. Technically, we are breaking out, but it's the first day of the week and it's a weekly chart. So I would like to quantify that these levels need to hold till Friday. That's asking too much in our markets. But yeah, it looks good. It's got an upward key reversal, Neeraj, last week. There has been crossover buy from the oscillators. The volume is highest in the last 38 trading sessions or so. Fresh buy, I'm not sure, but position stronghold. I think it looks set for a further upside.
You should show the volume picture as well that Hemen was talking about, the AVAT on the Bloomberg terminal. They will show you the volume picture for J. Kumar Infra in the session today. I think it's had a substantial uptick both in price and volume activity. Look at that. The blue line is the 20-day average volumes. The white line and the projected yellow line are the current day volumes. A huge gap between what it does on a normal basis versus what it has done today and projected to do today. So big price and volume action. It's a results day for J. Kumar Infra. I don't know if there's some preemptive buying here because I doubt that the numbers have come out as yet. I would have taken notice, but there's a big move there. The other one, Navneet, surprise, which has had a sharp move, is Shipping Corporation of India. That stock is up about 12%. You don't normally see it do a move like this. It's a big sharp move, and now closing in the day's high, and again 3 million shares traded on SCI. That's not really normal. It's a sharp move there. Sumit Bagadia, SCI, any thoughts here?
Yes, you are absolutely right. There is some abnormal activity which is going on in SCI. I think immediately looking at the chart, it seems that the stock has given a very good upside move today, almost a move of around 10 rupees from low levels. Now the 200 DMA for the stock is placed at around 88 levels. So this would be the immediate resistance for the counter. Once if 88 is taken away convincingly, then we will see extended move till 95-96 levels. I think those who have taken positions at lower levels, they can hold on the existing long positions with a trailing stop loss to be placed at around 81 or 82 levels for the extended target of 95-96 levels. Immediately 88 is a resistance, so a breakout above 88 will take stock prices to 95-96 levels in next couple of days.
Okay, Shipping Corp, that's trading with gains of 11.5%. The other one which has gone up is Precision Wires. That's up nearly 18% in trade, and once again this stock too has gone up on very high volumes if you compare it to Friday's trading volume. Repro India is the other one which has been doing pretty well, 15 to 16% higher. Remember, the earnings had come out and good set of numbers being posted by the company. Probably this is the earnings reaction that one has seen with regard to Repro India. Dharmesh, the mid-cap IT pack uptick is locked in upper circuit. Rolta is trading with good gains of 20%. Anything in this pack that you guys like?
In the mid-cap ID space, the topic remains to be Mindtree, though the stock price has moved up quite significantly, and now it's almost priced to perfection for FY19 earnings as far as they are concerned. But still, I think if the correction is there, one should be looking into buying that. Apart from that, be it Aptech or Rolta India or Nucleus Software, these are the kind of companies which maybe the stock price may be showing traction, but one should be avoiding them because the business sentiments are not too in favor of those companies. Rather than playing into the software side of the IT companies, one should be playing into the service side of the IT companies. For example, BLS International, that's a stock which provides e-services for visa, passports, and government digitization framework. Vakrangi, The caveat is nothing wrong with the company. That is what I believe and what I know about it. If all is in place and the numbers which they have been reporting, so this again provides a very good opportunity to accumulate stocks at current levels, because the businesses and the numbers traction which they have shown has been phenomenal, and I don't see, at least I'm not aware of anything which can go wrong. So these are the few companies which one should be looking into.
Now, you were fine with the company investing in another company, Dharmesh?
Yeah, if the surplus is there and if it can be, and the company invested in PC Jewelers, so nothing wrong with the jewelry company in which they have invested. I mean, if you look at the business model, that's the second best jewelry company apart from Titan. So why this entire thing happened, maybe some other reasons, nothing to do with the business per se, is what my understanding is. And if you have investment surplus, why we always look into investing into debt kind of a scenario? Why not into equity? When we all are talking about equity investment, retail participation, so corporates can also do that. So nothing wrong with that. As far as the company in which the amount has invested is not plagued or marred or have a history of any corporate governance issue.
Yeah, sure, Dharmesh, but
so
I don't know.
I don't see any reason.
I don't know. Where I differ is just that why let a company take decision with that? I'm investing in Vakrangi for its IT business and not for the expertise that the management may have of investing in other equities. So if you don't see an apt use of the money, please return the money to me and I'll invest it myself, or invest in risk-free instruments like debt, as opposed to well, PC Jewelers may be a great company, but why do I entrust Vakrangi to do that? But anyways, we can debate this till the cows come home, maybe some other time. Last 8 minutes of trade left, and I would want Dharmesh to actually comment on a lot more other important stocks as well, because a bunch of them flying around. But before we do that, get in the top closing strategies from both our experts first. And Himen, to you first, your top closing strategy.
HDFC.
HDFC, a buy call.
Buy call.
And target stop loss?
It's at around 1805. Stop loss 1795. Target 1825.
10 rupee stop, 20 rupee target from Himen Kapadia. What about you, Sumit? Your top call? Your top BTST or STBT?
DLF is looking good to me. I think from here on we can see a very good upside move. Stock is quoting at around 233, 34 levels. So one can initiate long positions at the current market price, with the stop loss to be placed at 227 levels on lower side for the upside target of 250 and 255 levels.
Okay, DLF, interesting. Dharmesh, this recent fall would have made a lot of slightly expensive companies a lot more reasonable, right? Now, within things that you liked, or within things that you heard the commentary of in this quarter from the managements, what stands out for you? Something that you would be inclined to buy, even if you have exhausted your limit, it still remains a company that is worth a buy.
See, my own take has always been buy the expensive thing. It will continue to be expensive, and the reason why it is expensive is because the quality is there. So first thing which I utilized to buy in this correction, though the correction was not there sharp enough in the stock, was Bharat Forge. So it never corrected, it always outperformed the market while the market was correcting, and the numbers were excellent. They have been doing fairly well for the past few quarters, and the pickup in Class 8 trucks in US and the forging business, the operational efficiency, everything is playing to their favor. So that remains the topic. And if you only from the valuation perspective, if something is available quite cheap, again from the auto space, I think Tata Motors warrants a buy, because though European numbers for JLR were not so great, and at the same time the US numbers, but I think going forward in the next couple of months with the a global economy on the mend, these numbers will pick up, and this is the cheapest stock available in the automobile segment, so buy that. And the third option from the private banking space, IndusInd Bank, again a great value buy. One should continue to, every 10% correction gives you a very good opportunity to buy for next 15% kind of an up move. So these are the top 3 picks from the large cap to mid cap space, where I advise my clients to buy into, and these are the areas which one should be looking into to buy.
Okay, we will thank you on that note. Dharmesh Kant, thanks so much for joining in today and giving us your thoughts. Always appreciate you taking the time out and being with us. That's Dharmesh Kant with his views on markets and specific stocks. Just before we wrap up, Yes Bank hasn't had a bad day today. I don't know if you've spotted anything unusual in the F&O activity, but Himen, Yes Bank on the charts.
I think little bit of playing catch up on Neeraj, whether it's Yes Bank or IndusInd Bank. Having said that, some more upside seems to be in the cards. 324 tested twice in the last 5 trading session, didn't break. Now we are bouncing back to almost hang on and close up of the 55-day moving average. So one gets the feeling that some more upside probably till 342 seems to be in the cards in the next couple of days if the market holds.
Okay, Yes Bank 342 if the market holds is what Himen is suggesting could touch in the next few sessions. Let's just pull up Aurobindo Pharma. That counter has also seen good amount of strength, which is just come in. I guess the stock's just about a day's high, sitting with gains of 3% above the mark of 600. Sumit, Aurobindo on the chart, any fresh bet that you would take?
Pharma and Sun Pharma both are looking good to me. I think Oro Pharma can move up from present levels. Yesterday, from the last trading session, the stock is already up by 15 points, and now immediately looking at the chart, it seems that the stock has small resistance at around 620, 625 levels. Once these levels are taken away, we can see a good upside move in which 655, 660 can be seen. So for a trading perspective, yes, one can initiate long positions in Oro Pharma at CMP with a small stop loss to be placed at around 590 levels for the upside target of 640, 650 levels.
Okay, that's a buy on Aurobindo from Sumit. In just 3 minutes for markets to close, let's head across to Neeraj to find out how exactly the closing today is panning out. And Neeraj, a good start to the truncated week.
Yeah, a good start to the truncated week, Navneet. Though you could argue that maybe you were slightly off from the highs of the day, but still about 0.75%, you'd probably take that with both hands. If I was told at the start of the trading day this is what the end would be, you'd probably be happy with it. About 1% higher for the Nifty Bank. The mid caps and the small caps have had a really good run. So about 1% and 2/4 or 3/4 for the small cap space, 1.4% for the mid cap space. Not a bad day for the broader end of the spectrum. What's gaining? Well, Tata Steel and all the metal names have done okay. Steel names at least have done really well. SAIL, not a part of the index, but has done well. The private banking space has put its weight on the gaining side. So yes, IndusInd, HDFC Bank, HDFC Limited too would be amongst the top contributors today. So good moves. Therefore, all of these, Kotak Bank too about 1% higher, and Axis Bank contributing. So it private banks all the way today. And you could probably have sensed that at the start of the trading day. Not too much by Reliance, about 1.5%, but contributing on the gaining side. And at the cost of what's happening to the PSU banks. SBI is down about 2.5%. Though I must say it's probably a bit of a lone ranger because BOB's ended the day fairly high, about 6 or 7% higher. So SBI is probably a lone ranger out here. So on balance, good day for the PSU banks, and that single-handedly has helped the index clock in this nearly 1% gain. What about the broader markets, though, Navneet?
Well, extremely good session for broader markets, Neeraj. And you were talking about the banking counters. We've seen a lot of open interest build up in a couple of stocks. So starting off with Bank of Baroda, that's seen huge amount of build up on the long side. And the stock today almost ended the day at day's high with gains of nearly 8%. The other one was IDBI. That was also quite active in today's session. IDBI finally closing with gains of closer to 8%. And the other one was Indian Bank. And most of them have been moving higher on back of earnings reaction. Indian Bank also surging in trade. Marico was the other one which reacted positively to its numbers. Marico closing the day around the gains of 4%. Well, from the broader markets, you also had Rossel India company which came out with its numbers. Good set of numbers on year-on-year basis, and that's the reason why you saw that strong uptick for Rossel India today. The mid-cap ID pack which we discussed during the show was quite active. So Aptec locked in upper circuit with gains of 20%. Rolta India also doing pretty well. That stock saw gains of nearly 12%. Well, BEML was active on back of some upgrade coming about from Elara, where they've given it a target price of almost 2,000 rupees, on back of which BEML surged in today's trade. Once again, on back of strong set of numbers, Amara Raja, the battery makers which so far were languishing in terms of stock price movement, finally saw some uptick. Amara Raja also closing with strong gains today. And the other stocks which were active finally were Fortis Healthcare, and they were active on the downside. Remember, the counter came out of the F&O ban, and huge amount of selling was seen for Fortis, and reacting negatively to its numbers today was Kitex Garments.
Yeah, that one sunk, I think, 12 or 13% lower, or 14% at close. So Kitex Garments didn't have a great day. So on balance, not a bad day of trade. We not ending at the day's highs. We've come off a little bit, but still not a bad close. Now, firstly, the volumes. very tepid at about 1. Almost akin to what was happening in Friday's session, and I doubt that they would have picked up substantially but for maybe certain mid caps. So the volume picture will come up on your screen, and I guess the cash volumes, okay, maybe par for the course. The NSE FNO a lot lower than what we've been used to off late, so that is one thing. And then the contributors, I think Reliance, HDFC, maybe HDFC Bank, yeah, HDFC Bank, Reliance, the top 3 on the gaining side. On the losing side, no surprise again, SBI and Infosys were the top contributors there. ITC had a negligible move really, but not too many losers, and which is why it features out here. But hey, private financiers saved the day today. I don't know if the Nifty Bank showed that kind of a jump in open interest, because I remember on Friday's session, the OI for Nifty Bank wasn't exactly showing some long positions, Navneet.
No, Neeraj. In fact, for Nifty, we did see some sort of open interest build up, but not for Bank Nifty. Let's see how the final data pans out. But towards the closing, I remember open interest was up nearly 4 to 5%. But these could also be the intraday trades, which usually gets unwound towards the end of the session.
Yeah, just the strength in the PSU bank or the private banks, though, was fairly robust. Let's see if this continues to move ahead. Well, Sumit Bagadia, Nifty Bank. What have you made of the trade today? Do you reckon some positions could have gotten rolled into the next day? And how would you approach trading the Nifty Bank in particular?
You've given a buy call in Nifty Bank. Nifty Bank has supported around 25,400 levels. Till that time, these levels are not taken away. One should be on buy side. On high side, immediately we can see levels of around 25,900, 26,000 levels. Once if 26,000 is taken away, we can see exchange moved till 26,400 also. So overall, today's move says that the Bank Nifty is headed higher, and from here on we should see a move around 200 to 300 points immediately. I think one can initiate long positions at the current market price. If by chance there is a dip of around 100 to 150 points, then they should be used as a buying opportunity.
I mean, the strength in global markets is back. We've seen strong gains in European markets. Let's say if the handover from US today and tomorrow will be good, and if we have a gap up opening on Wednesday, how would you approach the index?
I'd be slightly positive in the short term, Navneet. Like I said, 10,550, 10,736 are two levels that I'm watching out for. And like you said, US should open positive, and we're seeing a possibility of a short-term bottom in the US. France and Germany more, but yeah. So, but once again, the VIX over there is abysmally high at still 29. So if it settles down, yeah, I still have a feeling there's some more steam left in the bounce. No need. So I'd be cautiously optimistic in the near term, but yeah, optimistic as far as the Nifty is concerned.
All right, Sumit as well as Hemant, we'll leave it at that note. Thanks a lot for joining us today and taking us through your technical views on the markets. Well, it's time for us to slip into a quick break, but we'll be back with the management of Indian Bank discussing their quarter gone by. Stay tuned.
All right, back with Countdown right here on Bloomberg Quinn. Now, it's been a strong December quarter for Indian Bank with its asset quality improving. What have been the key highlights for the quarter? Joining us on the phone line is the Managing Director and Chief Executive Officer, Kishore Kharat. Also joining in from the research team is Shraddha Babla to take the conversation forward. Shraddha, over to you.
Thank you, Neeraj. First of all, good afternoon, Mr. Kharat. Just wanted to start off by asking you if you could share the slippages number for the quarter, the restructured assets, and also if there were any sales to ARCs during the quarter.
Restructured assets portfolio actually is our shrinking. If we see from almost close to 9,000, it has come down to 4,000 crore restructured assets. And overall stress assets, if we see, is hardly 8.88% of our total advances. So within that, 6.27 is our gross NPA, and remaining is the standard restructured account. So we don't actually foresee much pressure on that. Out of that 4,000 restructured also, on our watch list, there are accounts which are worth less than 500 crores.
Sure. And sir, if you could also specifically give us the gross NPA number for the agri and the MSME segments for the quarter?
Yeah, agri and MSME actually is not that big one. But agriculture, if you see, gross NPA, one second, I have GNPA, the numbers is hardly 624 crore for agriculture and MSME 1,243 crore. The total stress itself is in agriculture 2.14% and in MSME 5.24%. But when you look at the NPAs, the agriculture gross NPA is 2.11% and MSME it is 4.5%. So it is well within control.
Okay. And also, sir, how will RBI's 180-day dispensation on GST registered MSME loans, which was standard on 31st August, impact you? And if I'm correct, the condition was that the aggregate exposure of all the banks and NBFCs to a particular MSME should not exceed 25 crores. So how many of your loans will actually qualify for this dispensation?
To be frank with you, we are still actually getting the details of this registered MSME GST registered accounts. We will start flagging them in our system. So in this quarter, obviously, we were not in a position to take any benefit of that. But Q4, we will definitely we will get some benefit because this pressure, because of the GST, which is there on this MSME of getting their receivables, that will be in a position to disperse a little bit. So we foresee that the pressure on the MSME stress will certainly come down.
Sure. And sir, do you expect the gross NPA ratio to continue to trend lower into Q4 as well? And if there's any sort of a number that you can share with us as far as your targets for the gross NPA number for, say, June 2018 is concerned?
June 18, that is, you are talking about Q1?
Yes.
FY19. 2 quarters, actually, if you look at our gross NPA, the way we have controlled gross NPA, we have brought it down from 7.69 to 6.27. Our aim itself is to bring it less than 6% by March. If it is not by March, obviously by June 18, it will happen. And net NPA, we would like to bring it down. Today it is 3.30%, which also has actually come down from 4.76. So this 3.30%, we would like to bring it down to less than 3% by March itself. So our internal target is less than 6% and less than 3% for that. For June 18, if you ask me, perhaps there you will see further improvement. It may come down to 5.5% and 2.5%.
That's fantastic, sir. And last, if you could share the advances growth number for the quarter, and also if you could break that up segment-wise for us.
Yeah, sure. Our overall advances growth was, to be precise, 21.66%. Within that, actually, the RAM sector has grown in a better manner. If you look at the retail assets, the retail is grown by 26.9%, and within which the home loan is grown by 23%, vehicle loan is grown by close to 29%. Second segment is agriculture, which is grown by almost close to 22.5%. In MSME, we have grown by almost 38.5%, but within which, if you look at micro and small enterprises, that is grown by 42%. So our RAM sector has actually improved a lot during this Q3. And going ahead, Q4 also, we are expecting similar growth in these sectors.
All right. So thank you very much for speaking with Bloomberg. Quinton, wish you all the best for the quarters going ahead. So that was the management of Indian Bank. Very strong set of numbers, and management also guiding for NPAs to further reduce to about 6% by the end of March 2018. Back to you guys.
Thanks a lot, Shraddha, for that interview. In fact, the stock of Indian Bank was pretty active in today's session. It did end with good amount of gains of over 5%. Well, let's switch focus and talk about the European markets. It's a strong start to the week there as well. As you can see on your screen, all the key indices, CAC, DAX and FTSE, are trading in that range of gains between 1.3 to 2%. Let's head across to Yuan Potts, who joins us from the London studio to take us through the action that is there in the European markets. And Yuan, it's been a strong rebound there.
Yes, it has. Good morning. After that positive Monday session in Asia, the good mood has spread to Europe now. It's a beautiful day here in London, plenty of blue sky. But on the European equity markets, the colour of the day is very much green. Now, we're just over 2 hours into the trading session. Every major market firmly higher around Europe today. Germany's DAX up 1.9% and the OMX in Sweden up 1.7%. They're two of the best performers. Mining stocks, the standout sector performance so far today, they're up almost 3% already this morning. But chemicals and healthcare stocks are also well bid. But every single industry group on the Stoxx 600 trading high today. All 19 industry groups in the green. Now, the Bloomberg Commodities Index driving some of those gains, surging more than 1% today, and oil firmly part of that story. WTI crude oil futures up about 1% this morning. Oil rebounding from its 9.6% drop last week. That was its biggest weekly decline in 2 years. The gains are still being limited by some concern over a resurgence in US shale output. Now, on the FX markets, the dollar trading lower for a second day today. That's on concern that President Trump's budget proposal due later on today will drop a long-standing goal to balance the budget within 10 years. So watch out for headlines on that later on today. Back to you.
Thanks for that. Thanks for joining in today and giving us your thoughts. And of course, have a great day out there. Moving on, IRDAI Chairman T.S. Vijayan believes that the government's national health insurance plan is challenging but achievable. In a conversation with Bloomberg Quint's Ridhima Saxena, he further says that life insurance product regulation are in the pipeline but will take some more time. Listen in.
National Health Protection Scheme, probably you can compare with the Prime Minister's Jeevan Jyoti Bima Yojana, Bima Suraksha Yojana. That's for individuals, not for crop it is coming. This is for individual and the families. The government has announced for 10 crore. Quite exciting. That's what I heard it. I said, I mean, anybody who is working with insurance, we had some inkling on that thing even before that. It's quite exciting news. Implementation will be a challenge because 10 crore families are to be enrolled into that thing. 50 crore people are coming. Big outlay is there. However, we had experience of running Rashtra Swasthya Bima Yojana, at a very smaller level. Some states are having some insurance schemes. Some degree of expertise is there in that thing. And on the base of this expertise, I think it will be achievable target.
Do you think the allocation that has been announced, at least in the Niti Aayog presentation, the proposition of 12,000 crore that was made, would be enough for a health insurance scheme that you yourself say is at such a large scale? We have to see
at the details of the point, like what are the diseases covered, what is the maximum of the diseases, etc., etc. Unless we see the whole scheme, it will be unfair to comment on the pricing of that.
It says secondary and tertiary disease.
Secondary, tertiary diseases. Disease also there. Whether they're seeing on a particular disease or whatever the disease, you pay 2 lakhs. Whether it is there, those things have to be seen.
Sir, you just got done with a board meeting yesterday, and reinsurance regulations were one of the things that were expected out of the board meeting. So what is the update there, and how do you see that plan going?
See, you have to see the regulation making as a process. What we do is, expert committees are coming and it is put in public disclosure and debate goes on. Insurance advisory committee happens, they discuss the points, the feedback is taken by all the persons and taken to the authority. And this is still under discussion.
Correct.
Final decision will be taken after some time.
So, sir, do you feel that the order of preference would stay, or do you feel that may go away, not just at the GIC level, but also in terms of securing foreign reinsurance branches at the second position? Do you think that would happen?
Oh, that is one of the things which is getting discussed. Final decision how it will come is, I'm too premature to say that thing. There are several points where we are discussing with all the people. One more discussion we will be doing it.
Correct. So, sir, do you see when this would get implemented, the reinsurance regulations?
As early as possible, because we would like to see it in the light of the day as early as possible. One more round of discussion, I think it should be getting finalized.
Well, and that's an interesting conversation, of course. You can get more of this story on our website, www.bloombergquint.com. As we wrap up the day today, keep in mind that the markets have ended close to 1% higher, and the mid caps and the small caps have done extremely well for themselves in the session today. The world markets are looking okay. Dow futures are much higher than what they were at the start of the trading day. So we may not have too many surprises when we come back for trade after a day's gap, because tomorrow is a holiday. These are the Dow futures. They're trading well and truly in the green. So from Navneet and me and the team that put this show together, which is Countdown, thank you so much for watching. But as we wrap up the show, hear out what is arguably the stock of the day, and that is Bank of Baroda, which has seen its gross NPAs rise, but the management commentary has been positive on cost control. In Bloomberg Quint's Vishwanath Nair sat down with the Managing Director and Chief Executive Officer P.S. Jayakumar to discuss the bank's earnings in detail.
Actually, the performance of our slippages on the retail, agriculture, MSME, I mean the non-corporate segment was actually positive, in the sense they were lower than the last quarter. What has happened this quarter is a couple of blips arising from a large telecom slippage and a large power slippage in the power sector, and a slippage with respect to infrastructure. And these three accounts have basically resulted in the slippages being higher than what was it in the last quarter. But once you exit out and look at the core book, that's pretty much stable, I would think. And we have got to watch the space, but I do think going forward, hopefully we'd not have too much of these big tickets in our portfolio that would warrant them flowing into NPA.
So that target or the outlook that you had provided earlier on the gross NPA book between 45 and 50,000 crores, that stays as it is?
You know, one of the challenges we now have is to be a little bit careful with respect to what we can say on a forward-looking position. But let me put it to you this way, that our endeavor is to be very close, as much as possible, strive to be where whatever our guidance is that we are given from time to time. And that would include both the gross operating profit as well as the numbers relating to the provisioning number. So let us see how that plays out in the last quarter, because on a pro rata basis, we are behind those guidance number.
Okay. You know, this point keeps popping up, and we saw the country's largest bank reporting a massive loss. So is it too unfair to expect, you know, banks and bank managements to have sort of at least a quarterly outlook of, you know, what their book is going to look like, where exactly these NPs are going to come from, and what their provisioning number might look like? Is it too unfair, or because these surprises keep popping up and the management says it's over, now it's done with, we've reached a peak, and then suddenly the market is surprised again?
I think if you give it a quarter or 2 quarters, I would think you would start to begin to see a fair amount of stability in the banking sector. I think we should be coming to the close of the cycle. That's at least what I think it is. Now the question still remains whether the provisions are adequate, coverage ratios are adequate, but even there, I think a lot of catch-up is happening in every institution. So I would say give it a quarter or 2 quarters, and then we should start to see a fair amount of stability in being able to estimate the outcomes.
Right. Glad you mentioned the coverage ratio, because if you were to look at how the coverage ratio is playing out, if you remove that technical written off accounts, there's a difference of about 90 basis points between the coverage ratio either way. So just to understand, is writing off probably the best way to deal with the kind of stress that the banking system is facing at the moment?
I think the way to look at the coverage ratio is not one end of it, which is the plus TWO, or the other one without the TWO, because what has fully been provided would also have some level of recovery. So probably it is somewhere you have to take some kind of a point between the two numbers. Whether you take the average or it go up to the lower quarter or the higher quarter is a matter of assessment, but it's certainly more than the 59%, more so because when you look at some of the assets which are in the TWO, they're also beginning to show signs of resolution. They do have asset backage. It may take a little bit more time to enforce the security or realize them, but the fact is they're not all going to be zero. So I do think there is the numbers, the real numbers, leaving us is somewhere between these two numbers.
On the NPA provisioning, because that's an important part of this whole, asset quality game, there's been a rise of about 93%. Now, I remember you talking yesterday as well as today at the analyst presentation that there is this element of, you providing more than what is actually regulatory required, just so that it's a matter of prudential nature of the bank. But is it wise to do this at a time when there is a challenge to the system to provide higher? Rather, would you not wait it out and probably at a better time you would provide higher?
No, we're not providing actually higher. What I was trying to explain to you was that we continue to revalidate the security value, the realizable value, and then it results in some correction that has to happen. And those are the provisions. It arises not because of slippage, but because of the fact that the assets that you might have as security may be, showing some reduction in value, whether these are current assets or these are fixed assets. And when the valuation of the security is redone, then you come and say, okay, if this is the value of the security as per the IRAC norm, what do you then provide? And therefore that part of that exercise, some element of it is there. Sure. But in the past, we were taking provisions on a more principal basis, and we've taken a fair amount of coverage. At this point of time, it is a fairly balanced approach, but the important thing is that eventually we're trying to stabilize the net NPA number in absolute value. And so if you look at through the year, that number, might have gone up a bit and gone up a little bit, gone up a bit down, but it's fundamentally stable, which essentially means despite all the slippages that have happened, on a totality of the risk basis, the numbers are been pretty contained. Now the argument is that the market does not necessarily give value for the coverage ratio. It tends to ignore that. Well, that's a point of view, right? Our position is that if you have a higher level of coverage, it effectively means that you're more capable of securing results. But as we go to the INDAS provisioning rules, you have a further freedom of action because we are more closer to the INDAS provisioning norms than if you were to be at a lesser level of coverage.